And when it comes to China, here to discuss trade, tariffs, and some other trouble out there are our two trade experts, Alex Mihailovich in Toronto and Caleb Maupin in New York. Gentlemen, thank you so much for joining us. Caleb, let's start with you. The big news is China reacting, although some thought they might react stronger. But China is playing a long game here. What do you think's going on, Caleb?
Bart, if you look at China's recent history, this is a country that has essentially pulled itself up by its own bootstraps. You know, 700 million people lifted out of poverty. At the time the Chinese Communist Party first took power in 1949, there was not a single steel mill in China. Today, China produces over half the steel in the entire world. Now, as you're probably thinking and making reference to, you know, they do have 5-year development plans. That's kind of a staple of their Marxist political heritage. But they actually published a document in 2013 where they made reference to what they referred to as a 200-year vision for the country, thinking 200 years into the future. And the Chinese Communist Party, they're leading the country. I mean, China does have, you know, every day another Chinese person becomes a millionaire. They've got many billionaires. But at the end of the day, the party is in control, and they're planning out the economy essentially in their national interest. Now, you can bet that, you know, China has a 200-year vision, but you can bet that we're included in it. You know, they're not calling for China to isolate itself from the rest of the world. The way that they see it in the documents that they have published, the world is getting smaller, and the hope for peace in the world is human-centered, sustainable development and technology. That's what they see. They say the world is getting smaller, we're getting close together. We need to have a world where people are taken care of, people have what they need, people are trading with each other, people are getting wealthier, people are making money, and it's an atmosphere of cooperation. They argue that you can't view politics and geopolitics and international relations as a zero-sum game. You know, the buzzword in China these days is win-win cooperation, and they're absolutely outraged about these tariffs that are being imposed, and they argue that it's just not realistic in the 21st century to think that you can build a wall around a country and isolate the world, and if you do that, that's not going to lead to peace.
Yeah, well, one of the sentiments among a lot of commentators is that the Chinese have not reacted as strongly as some might have thought, with potentially the 50 billion in additional tariffs in addition to steel and aluminum. And in the U.S., the concern among a lot of folks is food and agriculture. That's our major export. And Alex, you cover this a lot on ag products, particularly with NAFTA, which has been a big bonus for U.S. food and agriculture. What are the potential problems for U.S. food and ag with regard to Asia trade in particular, Alex?
Well, like what Caleb said, this win-win cooperation view from China seems to be Donald Trump's point of view as well. Trouble could be down the road, but is it really down the road? We saw the markets bounce, as you mentioned earlier today, and that's on word that from people like Stephen Mnuchin, who basically said, you know what, these things are going to work out. With the talks with China, they're going to happen, and they just might work out. And that's exactly the way China looked at it. That's what I was basically saying last week to you. I hate to say I told you so, but I don't really hate to say I told you so when I'm writing this way, because the fact of the matter is Donald Trump is playing a certain game. He understands where China is coming from, and China understands where Donald Trump is coming from. It seems that it's one of the few countries in the world, when he says jump, they don't say how high. They know what his plan is and how he's going to break it down. But if China had to step back and actually get into a trade war with the United States of America, there would be some products that would be at top of the list, such as soybeans. They bought tons of soybeans from the States. Pork is a massive import to China from the U.S. We're looking at the aerospace industry. We're looking at the car industry. China knows where to hit if it had to. But the Chinese are already speaking a different language because they know what Donald Trump's language is, and that is come in there with a big stick, but really the man from the very beginning wants to get into negotiations with China, and this is what's going to happen. We heard last week, you know, when everybody was saying on every other network, oh, Donald Trump or the United States is going to slam China with $60 billion worth of tariffs. Well, that it just wasn't true, because there had to be 15 days, first of all, where the United States are going to figure out what these tariffs are going to be, and then another 30 days to sit on it and scratch your head and wonder, what are we going to do with this? So the plan from the very beginning is to do exactly what's happening now, and that's to push China into talks, and China is ready to talk and negotiate.
Well, you said so many things there, Alex, but and with regard to ag, before we just leave that, this comes at a time, these potential tariffs, when agriculture in the U.S. has taken some really pretty large hits over the last several years, with farm income down, as we reported here on the program. But you also mentioned autos, and Caleb, I want to ask you about that specifically. The Chinese place a 25% tariff on U.S. autos going in to China, while the U.S. only levies a 2.5% tariffs, although we do have a 25% tariff coming in for Chinese pickup trucks. But how do you see this all working out? I mean, autos are a big deal. You talk about jobs both in China and here. That's really important. What do you think is going to happen, Caleb?
Well, let's back up for a moment. Now, at this point, China makes more cars than the EU, the USA, and Japan combined. It's roughly 26% of the global car market. And at this point, we're also seeing that the quality gap between American-made or imported cars and domestic Chinese cars is being eroded. And the Chinese leadership is essentially at the point where they're saying that, look, okay, that if you know, some high-tech billionaire in China, he wants to import a Cadillac that's made in Michigan, he can afford to pay more for it. This is a luxury thing. But domestically, that they should be utilizing the domestic car manufacturers. There's a lot of different car manufacturers in China. You've got your state-owned enterprises that are making cars. You've also got a lot of different startup companies. And one thing that China has been doing is they've really been transforming the international car markets by pushing electric cars. They just push these new regulations that 1 out of every 10 cars that's produced in China and 1 out of every 10 cars that's imported into China must be what they call a new energy vehicle that doesn't run on gasoline. And this points to a bigger question for China on the global market, because there's very, very little domestic oil production in China. They are dependent on oil and imports of oil and gasoline. That's why they are building pipelines with Russia like crazy. That's why they're looking to protect the South China Sea and secure the trade routes and make sure that they can keep bringing those oil tankers in there because they depend on foreign oil. So the Chinese government has done a huge amount of investing and promotion of new energy vehicles, alternative energy, because they see this ultimately as a weakness. There's been this huge growth in manufacturing in China over the last several decades, but it all depends on foreign fuels, and that's something that they're trying to work out. Now, interestingly, we've seen that these rare metals that are used in the manufacturing of the batteries in electric cars, the price of these metals are going through the roof as the demand has just skyrocketed due to the new regulations that China has put on car manufacturers, basically stipulating that they need to start transitioning toward non-oil and non-gasoline-based fuels, that they need electric cars in China. So, you know, China is a major, major player in the international auto markets. You can be sure that, you know, the heads of GM, the heads of Chrysler, they are watching what the Chinese government is doing and what they are essentially telling to the essentially state-controlled domestic car manufacturing industry in China. You can bet that they're following it very, very closely. China is a major player in the global the global car markets, no question about it.
Alex, tell us a little bit about some of the other countries in the region, in Oceania and Australia, et cetera. How are they reacting? Maybe Australia may have gotten an exemption from the steel and aluminum tariffs, but how are they reacting separate from China?
Well, guess who hasn't got an exemption? That would be Japan. And Japan is a big one, and Japan's an important one here because Japan, from the very day that Donald Trump came in as president, well, they've been really trying to suck up badly. Remember Shinzo Abe giving them a $4,000 golf club. He thought that was going to translate into better relations. Well, Donald Trump and his administration are saying, you know what, Japan, we want a better deal. Just like we want a better NAFTA deal, just like we want a better deal with China, we want a better deal with you as well. We do not like this trade deficit. And that's a message that's being sent loud and clear at this point to Japan. They're not playing favorites, the Trump administration, but guess who? Just somebody you just mentioned a little bit earlier, South Korea. They have an exemption. They're the first ones actually to sign off before the May 1st deadline, where Donald Trump and his administration are going to figure out if who's going to get these steel tariffs and aluminum tariffs kicked in or not. Well, South Korea is off the board now. South Korea is also a very important partner with tackling North Korea. As for Australia and New Zealand, well, Australia is just trying to keep its nose out of everything right now. Their biggest trading partner is China. They're in that neighborhood, so they don't want to be hit by anything that might happen between the States and China. As for New Zealand, you know, they're trying to secure the $60 billion worth of goods that they export a year. They really want to keep their noses out of this. It makes a lot of sense for these countries to stay as neutral as possible when something like this comes up. They don't want to see a trade war. And really, when it comes down to the bottom line, is nobody really wants to see a trade war. These are trade talks. These are ways of initiating trade talks. I might be a little bit more bullish than what we've seen in the past, but it seems to be working, and people are listening.
We are always wiser when we listen to you guys. It's so great to have not just RT correspondents, but trade experts. Thank you so much, Alex Mihailovich and Caleb Maupin. Thank you for your time.
Thank you.
And thanks for watching. Be sure to catch Boom Bust on YouTube at youtube.com/BoomBustRT.